Thanks so much for checking out the Coin Stories podcast video page. I'm Natalie Brunell, and I am talking to the leading voices in Bitcoin. This episode is brought to you in part by the Bitcoin Conference 2022. It's going to be held in Miami this year, April 6th through 9th, and it's going to be the biggest Bitcoin event in the world. There will be speeches from all the biggest Bitcoiners, a music festival called Soundfest, Industry Day, and all the time in the world to network with this amazing community. I actually launched this podcast at Bitcoin 2021 and have since made a career of spreading the word on Bitcoin. So I highly recommend attending the conference. You can use the code CoinStories for 10% off your pass. I'm also super grateful to be sponsored by OKCoin, my favorite place to dollar cost average and stack Bitcoin, serving the most amount of countries of any exchange. OKCoin is the fastest growing exchange, serving over 190 countries globally with the easiest onboarding and lowest fees around. They're on a mission to make learning about and buying Bitcoin easier than ever, and they're all about bringing more financial literacy to everyone, which is something I really care about as well. From being the only exchange to integrate Lightning to contributing over $1 million to Bitcoin core devs, they are doing incredible work to further the Bitcoin ecosystem. You can head to go.okcoin.com/Natalie for $50 in Bitcoin when you sign up. I'm excited to share my guest today is Bitcoin strategist and bond expert Greg Foss. Greg spent more than 30 years of his career in financial markets focused on trading high yield credit, and we had a great time discussing not only his journey to finding Bitcoin, but how the government bond markets are manipulated through QE and how Bitcoin is really the only fix to our massive debt spiral. Here's Greg. All right, Greg, thank you so much for joining me. Super excited to chat with you.
So nice to be here. Thanks so much.
All right, so let's start at the very beginning. Are you originally from Canada?
That's correct. Grew up in Montreal. So my hometown, Montreal. When I was 30 years old, I moved to Toronto, where I currently live. But in between there, I lived in the US for a couple of years, both for school as well as for work. So I worked in New York City, as well as gone to school in upstate New York.
So tell me a little bit about just your upbringing. Like, what's your family like? What was growing up like?
Sure. I grew up in I didn't realize that, how lucky I was. I grew up in a fairly tight family, but didn't appreciate it like most kids don't when they're growing up, right? Montreal is a French and English environment, dual language, but I grew up in an English suburb, and I was heavily into sports like a lot of young kids are. I went to McGill University to study engineering, but to be honest, I didn't go to McGill for engineering. I went there to play sports. And
which sports?
I was a football guy at McGill.
Nice.
Did you watch last night's Georgia-Alabama game by any chance? I'm not sure if you're a football fan.
I did not watch, no.
Oh boy, huge game. So congratulations, Georgia Bulldogs. Very proud of that school. And I have some friends that went there. But so, yeah, I was at McGill. I was in engineering, Natalie, but I knew I didn't want to be an engineer, but I loved mathematics. I was good enough at it. There's a lot of really, really smart engineers, Michael Saylor being one, who's truly a rocket scientist. And I won't put myself in his shoes or in his category, but I knew that I didn't want to be an engineer, but I didn't really know what I wanted to be. So after 4 years, when my sports career was over, I decided I wanted to try and go into business. So I took an MBA, or I applied for an MBA. I applied to one school in the US. It was Cornell University. And I was lucky enough to get in. I would not have been admitted to Cornell as an American citizen. I had the marks, but I didn't have the work experience. But luckily enough for me, they were trying to build an international business program. So I went to Cornell as a very young student, and I was lucky to, be able to mix with the undergrad community as well as the grad students. And it was just a great experience. Met some amazing American students down there, and who remain very, very close friends to this day, and experienced some sadness too over that time. One of my roommates from Cornell was actually killed in the World Trade Center in 2001. So, I've experienced a lot of cultural things with the United States. I love the USA, but I came back to Canada, worked in Canada in finance for the last 35 years. So I'm a financial guy. I like to say I'm a financial engineer. So I'm not a practicing engineer, but I certainly understand the mathematics, and that math makes the world go round, right? Many people will say that mathematics is the base layer of language. I believe it is the base layer of language. And I always approach things with a mathematical intuition and try and figure out things with, probability analysis and whatnot.
Yeah, math is the universal language. I love meeting so many Bitcoiners who have that engineering background because I feel like you really know how to tinker and you want to kind of dissect how everything works. And the fact that you trust, the Bitcoin network and its programming, I think speaks to also how your mind works, because it all has a purpose, and it all sort of fits together in this huge new incentive program that we're building that's completely flipped on its head from the one we're used to, right?
Well, it's so well said. You're very eloquent with your words. I've seen you speak in sound bites, and I'm like, wow, this girl has it. You can make an impact with your words. So engineers, yeah, they are analytical. They are inquisitive. They trust mathematics. They approach things with let's solve this problem mathematically, right? It's not subjective. It's not qualitative. It's quantitative. It's all about putting a problem into its mathematical context. So yeah, engineers seem to understand Bitcoin. One of the things I will say, and I love Michael Saylor for saying this, look, Bitcoin is digital energy. For me, it's not digital gold. I sort of like that analogy, but it's way better than digital gold. It's digital energy. And for an engineer, it's all about energy, right? Energy is what you study when you study engineering.
Just out of curiosity, when you were growing up in Canada, how much did you pay attention to what was happening in the US and maybe the cultural or economic differences? And why did you choose to study here as opposed to in Canada?
So great question. You'd think the US and Canada are very similar until you actually live there. So what did I learn? First of all, you have to understand what Canada is. Canada is basically a country that's, in kilometers, 5,000 kilometers long. Okay. And it's really only about 150 kilometers wide or thick, because 90% of Canadians live within 100 miles of the US border. Okay, so we have this huge country, but everyone lives in a ribbon, and it's very regional. Okay, you have the East Coast, you have Quebec, which is French speaking, you have Ontario, then you have Western Canada. And it's not vertically and horizontally integrated like the United States is. So what are some of the differences? Well, first of all, the USA is much more capitalist, much more open to innovation and promoting entrepreneurialism. That's one of the things I wanted to experience when I was down there. There's a lot of really, really, really smart Americans. Okay, they were always able to tell me what was wrong with my government system, and that was amazing, since they knew more about Canada's government than I actually probably knew about my own government. Now, to be fair, I was an engineer. Okay, I didn't study government. One of my roommates was a government, studied government in whatever it was, within his business or his discipline. The point is, there's a lot of really, really, really smart Americans. Now, there's a lot of not so smart Americans as well. That's just the way the world works. But overall, I think the intellectually curious Americans are a lot more intelligent or curious than intellectually curious Canadians. All right. And it's just, I don't know how to describe it, but so I was very happy to get that experience. And by the way, Canadians grow up a lot of times in business in particular, sort of being afraid of Americans, meaning, oh my God, they're from America or they're from New York City. They got to be so powerful. No. Look, Americans put their pants on one leg at a time. There's no big difference between that. And it's a confidence thing, right? You have to have confidence when you deal with Americans, the blustery American. So what? Call them out. They're nothing special. They might make a lot more noise, but they're not so special. So you learn that, you gain confidence, and then trading with them or against them for 30 years, you gain a cultural appreciation, and then you know who you're up against.
Okay, so I want to hear a little bit more about your career, but first, just out of curiosity, I mean, Bitcoiners are generally capitalists. They're very critical of socialists. And with, Canada being a little bit more socialist,
Yes.
arguably, than
Left of
other
center.
countries.
Yes, correct. Yeah.
Would you say the quality of life is better for the average American or the average Canadian?
Oh, that's going to be tough. Yeah, I need to be careful. There are absolutely extremely great things about both countries. All right. The most left-leaning American is barely a liberal in Canada. That's the truth. Okay. Like there's just everything in the USA is much more right of center, and everything in Canada is much more left of center. It's just the way, we have things like universal healthcare. It's just a social fabric of Canada. Now, by the way, we can't afford it. Okay. So we have it, but we can't afford it. So I understand why the USA doesn't have it. Either way, there's good things and bad things. I like to say this, look, I'm a capitalist, but I'm a capitalist with a heart. Okay. I'm borrowing that word from Lee Cooperman. He's a capitalist with a heart. He grew up in the Bronx. The guy is brilliant. He hates when people tell him what he has to do with his money, but he does it anyway. He gives to causes that help people who are less fortunate than he is. So do I model myself after Leon Cooperman? I do. I'm a capitalist with a heart, but I hate when the government tells me what I have to do with my money. I'd rather do it out of the goodness of my heart.
Got it. That makes sense. All right. So how did you start your career? And what did you do when you came back from Cornell and you moved back to Canada?
Well, this is key for my journey down the Bitcoin rabbit hole. And I say this often. So yeah, I could have worked on Wall Street. I had some opportunity. But I came back to Canada and I worked for Canada's largest financial institution, which was the Royal Bank of Canada. And this was in 1988. Okay. So yeah, I'm old. And 1988, I was working directly for the CFO of the Royal Bank of Canada. I was in a special project group staffed by Canadians, but incidentally, my direct report was a Harvard MBA. So I don't know why they recruited different guys, whether it's ladies or guys from international business schools. But at the point being, we were a special projects group that worked directly for the CFO. And it was a really interesting time in finance. One of the first projects that was assigned to me was evaluating the Latin American debt portfolio of the Royal Bank of Canada.
Oh, wow.
So much like every single multinational bank in the world, Royal Bank of Canada had lent money to lesser developed countries, LDC countries, and most of these countries had defaulted on their debt. The biggest ones we had lent money to, Mexico, Brazil, South American countries, but we had exposure to Philippines, Vietnam, other countries who were also in the same boat. I think there were 44 different countries, if memory serves. But the point is, Royal Bank of Canada had lent money at 100 cents on the dollar to these countries, and they had stopped paying. And the debt of these countries were trading, not often, in the secondary market amongst hedge funds and little bits of trades here and there at about a 75% loss, which meant every dollar that the bank had lent to these countries had lost 75% of its value. Now, US Treasury Secretary Nicholas Brady, realizing the problem of the international bank community, came up with a plan to change the structure of these defaulted loans. So my job was to determine, one of the first projects, which Brady plan option we were supposed to take. Okay, Natalie? The interesting thing I did was, okay, Treasury Secretary Nicholas Brady is coming out with this plan, but what is our overall exposure? How does the Royal Bank line up? And I couldn't believe, on the back of the napkin, I was able to determine that the Royal Bank of Canada, Canada's largest financial institution, was insolvent. It was on its way to bankruptcy. Okay. Wow. And so the definition of insolvency, when the book value of your assets is less than the book value of your liabilities, such that your book value of equity is actually negative. And that's what was the case with the Royal Bank of Canada. We had $4 billion. Now it's a billions. It sounds like such a minuscule amount, Dave, but in 1988, $4 billion was a lot of money. We had $4 billion lent to LDC countries, of which 1 billion was to Mexico. And if you had written down the value of these loans from $4 billion down to 1 billion, right? Because they'd all lost 75% of their value, that $3 billion write-off vaporized the book value of equity of Royal Bank of Canada. And I was like, hold on a second, Natalie, I just went for 4 years of engineering and 2 years of US business school to come back and find out that our financial system is a Ponzi scheme.
Wow.
And I'm like, how is it that people have confidence to deposit their money in these multinational banks without understanding how the system works? And what's the answer? They're too big to fail, right? The Canadian government is assumed never to let any of the big banks in Canada fail.
Right.
So how do they do that? They print money. They have the ability to print money. So I promise you, I didn't know what the solution was, but I knew what the problem was in 1988. And over time, I traded credit. I was working at hedge funds. I didn't become a gold bug because I wasn't sold on gold. But boy, let me tell you, when I found Bitcoin in 2016, I'm like, I've been searching for this thing for almost 30 years. I can't believe I finally found it. And so since then, it's a long journey. I've worked and traded credit. I've traded in 4 successive financial crises, long-term capital management in 1998, the great financial crisis in 2008, the COVID crisis, and then the starting one was the LDC crisis. Every single crisis, you learn new stuff. But I'll tell you, I've never been so enamored with a product that solves all the ills of the fiat system as when I found Bitcoin in 2016.
Yeah, I love the way you described that, because I think that was the feeling for so many of us. Like me being a journalist, I saw firsthand in the trenches the crises that we were facing on a human level, and through local governments and local law enforcement, all these problems that were playing out. And I didn't connect the dots until Bitcoin, but I knew there was a problem. I just didn't understand that there even was a solution. I was starting to get very, very jaded, to be honest with you.
It's cool that you came at it from a different angle though, right? So I don't know your history. I mean, I know a little bit about you, but I don't believe you're an engineer, let's say, but you came at it from more of a more subjective evaluation rather than a quantitative evaluation, right? There's something wrong, just like people today know there's a problem when the government it gives you money. They like receiving the money, but they got to think to themselves, as you said, jaded, any person has to say, well, if the government can just give you money, why do in fact we even pay taxes then, right? Why don't they just give us money forever? Why do we work? Why do we do this stuff, right?
Yeah, no, it's true. And I think you're right. I came to it from a more human experience just level. I mean, I would talk to different people every single day. And when you add up all those experiences, over the course of a decade, you're reporting on the same problems getting worse. And then politicians claiming, I'm going to be the one that, makes the difference. It's this guy's fault, right? Pick me. I'm going to make it different. The next year, the problem's even bigger. Life is even harder for the average person. And it's just like, you're washing through these stories and you're like, why is this all getting worse when people are pouring money into it or claiming that it's going to be better if you just vote red or blue? It's just, it was crazy to me. So,
well, I love the way you explain that. Sorry to jump on your thought there. The cool thing is that you admit there's a problem. There's so many people, they implicitly feel there's a problem, but then they don't say anything, right? And so imagine me when I was in 1988, okay? I have a ton of school loans, school debt. I realized that the commercial banking system is built on, smoke and mirrors and held together with masking tape sort of thing. What am I going to do? Go run to the Wall Street Journal and as a 25-year-old kid sort of try and expose the banking system and then torpedo my career for the rest of time? I'll never work in finance, right? So I knew there was a problem, but I felt bad that I didn't say anything, except I didn't know what the solution was. And so at least now both of us found the solution. So we're coming out passionately with something we truly believe is a solution to the problem.
What's the difference between, I guess, the central banking system in Canada versus the US? Because I know obviously 1913, when the Federal Reserve was established, and back then we couldn't purchase treasury bonds and get ourselves into the sticky situation we're in now. But what is there, do you know a little bit about the history that you can share in a kind of summarized fashion?
Yeah, I'll summarize it this way. Canada does not matter. There's only one central bank in the world that matters. Well, let's say two. One is the Fed, and the other one's the European Central Bank. Everything else is a rounding error. So the history of the Bank of Canada, who cares? At the end of the day, we cannot survive if the US doesn't survive. So Canada is a G7 nation. As you know, that means it's one of the largest 7 economies in the world, not including China. So G8 includes China, but Canada is a G7 nation. Natalie, I don't have any pride in saying this, but Canada will be the first G7 nation to default. Okay. And that's why I'm so concerned. First of all, our economy is smaller than the economy of California. Think about that for a sec. Okay.
Yeah, that's right.
Although we're a G7 nation, we're smaller than California. There's a lot of basket cases out there in G7 land, including Italy and France, but they are covered by the European Central Bank, right? The European Central Bank basically amalgamated a bunch of basket cases under the wing of Germany. If they weren't amalgamated, then I would say, yeah, Italy would be done before Canada. But Canada is a standalone G7. We can print our own currency, but we will be the first one to default. It doesn't bring me any pride. And people will say, Foss, you cannot subjectively say something like that. And I'll say, oh, yes, I can. Quantitatively, I'm going to show you what's called credit default swap markets, priced, evaluating the default probabilities of various sovereign nations in the world. And Canada, amongst the G7, is in the worst shape.
Wow. Do you know that video of I love this one Canadian politician. I follow him on Twitter.
Oh, Pierre Poilievre. I hope it's Pierre.
Yeah, where he's asking, where's the money coming from? And
yeah. So do you know who, so Pierre, first of all, full disclosure, he and I have text messages going on a regular basis.
I love that guy.
I love him too. Do you know who, have you ever interviewed Jeff Booth?
Yes, of course.
Okay. So Jeff Booth and I, have become close friends in Canada. I've only met him about 12 months ago, but he's like my brother from another mother. He and I have teamed up to become a pretty cool 1-2 punch. I'm sort of like I'm the noisy bulldog, and he's the very quiet, cerebral. But Pierre, he introduced me to Pierre, and because Jeff and Pierre are quite close. And I will tell you that I have given a presentation to 45 members of parliament in Canada on Bitcoin.
Wow.
And Pierre was one of them. And
I love it.
He has openly admitted he owns Bitcoin. I'm hoping he'll promote it, or not promote it, but endorse it a little more openly. But at this point, at least it gives me faith that there are some Canadian politicians who get that you cannot just print money. Our current prime minister is an absolute buffoon when it comes to mathematics. And he has said things like, the budget will balance itself. And I don't care about monetary policy. Well, look, with political leanings aside, if you were the CEO of any publicly traded company that made those same statements on behalf of the balance sheet of the company that you run, I mean, you'd be fired on the spot, wouldn't you? Yeah. You can't say stuff like that.
Exactly. Okay. So how did you become a bond expert? Where, after you were working for the Royal Bank, what happened with your career?
So I wanted the Royal Bank to actually buy more debt, right? I actually went to the CFO and I said, his name was Emil. And incidentally, here's a sideline. And look, I'm not doxing anybody, but I have to tell the truth. So I went to Emil, CFO of the Royal Bank of Canada, and I ran through the math with him about how we were insolvent. And I go, Emil, we have a big problem. And his answer was, I know, don't tell anybody.
Oh, nice.
Holy crap, right? So anyway, I ran through the mathematics. I picked according to different interest rates and oil price scenarios and everything based on Mexico. We went all in 100% to this one option that turned out to be worth a couple of cents on the dollar, meaningful amounts of money, 30 or $40 million worth. We picked the right option because Goldman Sachs came out with a big evaluation. And I was proud that we picked this, what's called the PAR option. And we picked the PAR bond option. And I said to Emil, let's buy more. These bonds are now cheap, okay? The solution, they turned a 5-year bond into a 5-year loan, defaulted loan, into a 30-year obligation, Natalie, backed by US Treasury zero coupon notes, which would accrete in value up to par anyway. It was an accounting gimmick that didn't require them to write down the value of the loan. Okay. Accounting gimmickry. Doesn't matter. Wow. I said, you know what? At 25 cents on the dollar, these are cheap. Emil, let's go out and buy more. So what do you think a banker says? No, thank you. We've blown ourselves up at 100 cents on the dollar. Why would we want to buy more at 25 cents on the dollar, right? Mm-hmm. So I'm like, well, this is discouraging because you're supposed to, buy things when they're cheap, not just when they're expensive.
Yeah.
And so anyway, we didn't succeed in buying any, or me convincing him to buy any. I said, I got to go and work for a fund that is allowed to buy this sort of stuff because I wanted to get in. So I went from basically evaluating debt to sitting in a chair where I made the decision that said, yes, I want to buy it, or I'll sold to you or ship it in. And I started becoming a risk trader or a bond trader for 30 years. I worked on at various hedge funds. Again, I lived through the great financial crisis. That was a scary point in time, but you've seen the movie The Big Short, probably. Mm-hmm. Everyone talks about it.
Yes.
I actually was the reverse of The Big Short. We started buying all this stuff at 20 cents on the dollar when it went down, and we bought hundreds of millions and billions of dollars of this defaulted debt, and it actually matured at 100 cents on the dollar. So, there's two sides of every trade, right? You can mm-hmm. short something when it's overpriced, or you can buy something when it's really stupid cheap. And we were short it going in, and then we bought it and covered and rode it all the way back up to 100 cents on the dollar. That was the end of my career in 2016 because I just couldn't figure out how I would make a better trade than we had ever made on that particular. It was a 5-year trade, but boy, we made money in the down cycle, and we made money in the up cycle. It made a lot of money for our investors. I just looked at myself and I said, I've done this for long enough. How am I ever going to outdo what I've done in the past? It's time for me to retire. And so that was 2016. Wow. And I said, well, it's going to be great. I'm going to ski, I'm going to surf, I'm going to do all the things I've always wanted to do, but there's only so much of that you can do. And then someone introduced me to Bitcoin, including a guy who had an idea to start up Canada's first closed-end Bitcoin fund. Okay, so we actually succeeded in launching the first closed-end Bitcoin fund on the Toronto Stock Exchange, which was the precursor to Canadian Bitcoin ETFs, where we now lead the United States in spot ETFs. Yeah. And I was proud to be involved in that project.
Wait, so who was it who first introduced you? Like, how was it explained? And did you immediately think, wow, I'm curious?
Not that I'm curious. So I grew up in Montreal, as I told you. I'm actually a partner. Over a 25-year period, I've invested it with my buddy. We own 8 Irish pubs in Montreal. Okay.
Nice.
So yeah. So I'm sitting at my pub in Montreal, and I meet this guy who I had never met before, but we hung out in the same circles in Montreal. And he starts talking to me about Bitcoin. And what am I? I'm like Peter Schiff, right? I'm curious, but I'm like, nah, it's a Ponzi. It's got to be a Ponzi because Peter Schiff told me it's a Ponzi, so it's got to be a Ponzi, right? But then I actually looked at the blockchain in action. So there's this one visual screen for an engineer that blew me away. And it's called tradeblock.com. You actually see the blockchain in action working, this beautiful living machine for an engineer. I could feel it breathing. And I go, well, okay, walk me through this. There's only 21 million of these. Nobody controls it. I can transfer value over time and space anywhere I want in the world, and it settles in 10 minutes. I was all in. I'm like, I cannot believe that this is the solution I've been looking for, again, for 30 years, right?
That's amazing. Wow. Okay. So, I mean, when you were working in the bond industry though, was there a point where before you were able to retire where you were like, oh, I've made it, and money is something that was, I don't know, changed your life in some way, or something that you thought about?
Good. Nat, can I, sorry if I call you Nat or Natalie.
Yeah, Nat, whatever you want.
Money is good, right? Because it's an incentive, but money can also lead you astray. Money becomes a measuring stick on Wall Street and Bay Street. Like, I have to make this much money. Why do you have to? Well, because this guy's or this lady's making this much money, and I want to make as much as her, So you get caught up in it. And to be honest with you, it drives you crazy. I was a frayed nerve end. Okay. After 30 years of sitting in a risk chair, I truly was a mess. I had to retire. Mentally and physically, my body had been beaten up after 30 years. The average trading life of a bond trader is probably around 6 to 8 years. And I lasted 30. Okay.
Wow.
So like, you can appreciate it, sort of like being a mountain climber, it beats up your body, and you're pretty good at it when you're in your 20s. But by the time you're 40, you probably shouldn't be climbing mountains as crazily as you were when you were 24, right? So the same things apply to bond trading. It's emotional. You manage money for other people. There's 3 ways you can lose money, or 3 different levels of concern. Losing your own money is the easiest. Okay. You still don't feel good about it, but when you lose your own money, you know what? Shit happens. Excuse my language, but stuff happens, right? Then if you're working for a bank or trading for a bank, you still feel bad, but you're like, the bank, they got billions and billions. They can afford to lose a little. If you lose money for friends and family who are clients, which you do have when you're managing like a hedge fund, you feel like a bath mat, regardless of whether you still outperformed the market. You've still lost money, right? Yeah. So it wears on you. What did I learn? I learned that you have to remove emotion. You got to remove emotion from every trade. You got to look at things without bias. So I know you've interviewed Peter Schiff, and I've debated Peter Schiff. And all I will tell you is Peter Schiff is a horrible risk manager, because he understood what the right trade for him to do was, which would have been buy a little Bitcoin. I think he admitted that with you. I've heard, I haven't seen the interview.
He did.
He certainly admitted to me on our debate that he was a horrible risk manager. And he also said he didn't care. And I'm like, dude, you cannot sit in a risk chair and not care about your client's money. That is absolutely fiduciary irresponsibility. Yet he admitted it. So the point is, look, you try and manage risk, you try and do everything to the best of your ability, and you try and remove emotion, because you'll always make the worst trade you ever can when you do it with emotion, right? You either sell right when you shouldn't, or you buy things just because there's euphoria ever. So boy, oh boy, I mean, I'm rambling on, but life in a risk chair is different from any other. You live every single day. You think you have time off? You don't have time off. Right. You go and see a movie. You're sitting on a bad position, let's say a huge position that can torpedo your whole year. And you go with your wife to a movie, and she's like, wow, that was a great movie. And you're like, yeah, that was a great movie. And you think to yourself, I didn't even watch the movie. All I was thinking about was this stupid position that I'm in that's going to ruin my year, and that's what happens.
That's fascinating. Yeah. I mean, I think there are people in the crypto world that are like that there, because you have to check the price 24/7 now. So
that's not good, right? This is a long, low time preference. Talk to me in 20 years. Yeah. This is important about ensuring against shenanigans of central banks, which play out over decades, not over quarters.
I want to understand the bond market a little bit better because, to be honest with you, I look at it and it's like, especially with the inflation that we're seeing,
Okay.
you're basically losing money by purchasing bonds. Yet it's this massive, massive industry. It's a behemoth. Why?
It's the biggest financial market in the world. Debt and bonds combined are over $400 trillion.
Okay, so can you talk to me a little bit about why the bond market is as big as it is when you could literally put your money into almost any other asset and
Great question.
see a bigger return? And what's sort of maybe
Okay.
the history of the bond market?
So a couple of things. So smart question. Okay, first of all, why is it like any investment, you have to compare things on a return versus risk basis, and bonds in any capital structure of a company, bonds always rank with a priority of claim over the equity, right? So one of the things that I used to do as a bond trader, people would say, Foss, you're a high yield or a junk bond trader. Okay, so I'm up here, I'm called a junk bond trader, and there's equity of the same company. And I'm like, okay, if I'm a junk bond trader, you are a super junk equity owner or trader, right? I rank prior claim in the capital structure. So don't use a pejorative to me that my bonds are shit. If you're holding a subordinate claim, you're doubly crap, right? So anyway, it's all about hedging the prices between the two. That's in a capital structure of a corporation. A government doesn't have equity, but all a government has is a yield curve to borrow money, the various prices along the yield curve, along the maturity that it costs a government to borrow money. Government bonds are the quintessential risk-free asset. Okay, they are risk-free in the context that, firstly, most governments have higher credit ratings than the given corporation, right? So the highest credit rating used to be the USA, AAA rated, gilt edge. It can't default. You can take exception with that. It still has a very high credit rating, but there is actually a credit default swap market where people are purchasing insurance on the United States defaulting, not making good on their obligation. And you could say, well, Fosser, how is it possible that the USA can default if they can print money? And I'll say, yes, that's true, but they also already have a history of default. When was the last time the USA defaulted? Nah, 1971. Okay, when they went off the gold standard and basically kept everyone's gold in their vault and said you can't have it back. Well, that's a contractual obligation that they defaulted on. So all a bond is a contractual obligation to pay you back a series of cash flows. You lend me $100, I'm going to pay you $4 annually over a period of 10 years, and you'll get your $100 back plus $4 annually. The $4 is your yield. It's your either risk-free return, or in the case of a corporation, the corporation might have to pay 8%. Governments borrow at 4%, in the old days. Now, governments borrow, the US Treasury borrows at 1.75% in the 10-year. And that 10-year coupon compensates lenders for inflation concerns as well as credit quality concerns. Now, admittedly, the credit quality concern on the USA is very low. It's not zero, but it's very low. Most bonds are traded right now with an inflationary expectation, but I think you're nailing it when you say, well, if inflation is at 7%, we'll see the number tomorrow, but inflation's at 7% and I'm getting 1.75%. Man, what a horrible investment. Like, why would I invest in that to lose money on an inflation adjusted basis? But here's the kicker. The $100 that I lend you at time zero, I'm most likely going to get back at year 10, right? I'm most likely, not 100% certain, but the value of that $100 in 10 years is way less than the value of the $100 you lent at time zero, isn't it?
Yep.
So not only are you losing money, not earning an appropriate return, the value of the $100 you get back has been debased. Bonds are the stupidest investment that I can tell anybody I have seen in the 35 years I've been trading bonds. Who in their right mind owns a bond under these circumstances? Well, I'll tell you, a lot of foolish pension funds, including CalPERS. I think you're based in California, right?
Yes. Yes. Yep.
CalPERS has decided that they're going to enhance the return on their portfolio by leveraging it. They're going to borrow money on behalf of the public employee retirement system, PERS, whatever PERS stand for. I think that's what it stands for. The PERS is going to, on the behalf of California employees, leverage their portfolio to enhance returns, to meet their contractual rate to their pensioners. What a disaster. What a disaster. Yet these are the fools that are managing risk on behalf of pensioners in California.
Yep. Well, I mean, right now, obviously, everyone's watching what the Fed says, and you mentioned some new numbers are going to be coming out, but it seems like they're pretty intent on ending this 39-year bond bull market. What happens
well,
next?
It's only mathematics, Natalie. They cannot end it. Okay. The Fed cannot allow interest rates to rise meaningfully because the debt balloon is so big already. If the coupon on the debt is allowed to grow and make the debt balloon grow organically, the debasement of the currency is accelerating, and it's over. It's already over mathematically. There is no possible way the Fed can stop printing money. The Fed needs to print money to solve the debt balloon. In other words, the debt burden is growing faster than the tax base of the economy can ever grow.
Right.
How do you solve that?
What was the point of no return?
It was actually before COVID. So there was a chance coming out of the great financial crisis that we could have, and you mentioned politicians, there could have been some austerity measures that a politician went in and just said, look, guys, we're going to bite the bullet. We had to do all this stuff coming out of the great financial crisis, but now it's time to pay it back. Okay. First of all, no politician will ever get another 4 years in office if that's their, first of all, they probably won't even get elected. So they'll never tell people, let's say there was a really do-gooder that went in. They don't tell people that they're going to do this, but they get in office and they're saying, okay, I flummoxed you guys and I'm going to actually become the most austere politician and we're going to pay back all our debt. Well, the economy crashes, we go into a huge recession, and everyone will never vote that politician in for another 4-year term anyway, right? So you can't solve this thing over 4 years. So nobody's ever going to try. The point was, we could have done something coming out of the great financial crisis. It would have been painful. Stock prices would have gone down, but we could have. And then COVID hit, and now it's mathematically impossible because they just opened the floodgates on all sorts of quantitative easing and all the other shenanigans that they do. So go ahead.
So just like what you discovered about the Royal Bank, so essentially we are insolvent.
That's exactly it. What has happened over the last 30 years, the leverage of the financial system, which was over levered to begin with. And it brings up this question: how come the bond markets are so big? Because banks are 25 times levered to their equity base. It means for every $100 of loans a bank makes, they only hold $4 to $6 of loss absorbing capital. The other $94 is debt and depositors' money. That's why the debt markets are bigger than anything, because the banking system is 25 times leveraged to its loss absorbing capital.
And the biggest buyer of the bonds right now is the Fed, right?
Okay, so all true. So what have we done? We've kicked the financial crisis down the road so that the leverage has transferred from the financial system to the balance sheets of the banks.
So, I mean, do we really even know what the correct price for a bond is?
No, in my opinion, no, because there's an elephant in the room that's suppressing interest rates because they were buying $120 billion of bonds each month. Now, they've said they're going to taper. My prediction is they will never be able to stop tapering, let alone raise interest rates meaningfully. It's mathematical certainty that they cannot do that.
So how does this play out? We have, Fed Chairman Jay Powell speaking. What's going to be next? They say the rate hikes are going to be a little. Do you think the market can absorb maybe small rate hikes?
Jay Powell's a lawyer. I'm not certain he's that good at mathematics. Okay. Jay Powell's a lawyer that's trying to protect his failed legacy. Okay. Let's be honest. I have heard some very influential Americans call out Jay Powell for what he is. And I'm not going to go there. I'm just going to rely on mathematics. He does not understand that it is mathematically impossible to escape this debt spiral. But someone probably tapped him on the shoulder and said, hey, Jay, there's no way that interest rates can go up because it just means the debt balloon expands faster. And guess what happens when the debt balloon expands faster? It pops. So we have to pretend that we can keep this charade going. The charade. Now, there is a solution, and you know what the solution is. We're getting there. It's Bitcoin. Bitcoin can be the solution for a store of value or a savings account, and you can still have this checking account based on a fiat currency that loses value on a mathematically certain basis. They both work. The exception is, would you ever own the bonds of this mathematically certain to fail checking account? And my answer is not if you have any brains. Okay.
Okay. So, well, then why is it that we're rapidly debasing our currency? We have bonds that essentially pay nothing due to inflation. People have exposure to knowledge about Bitcoin. Why is Bitcoin's price dropping at just the mere breath of Jay Powell?
I haven't looked at it that closely today, but I think today was, here's my thesis. First of all, Bitcoin's only 13 years old. Okay. Secondly, the price has gone down from its all-time highs, but 1 year ago was when it was at the current price. So remove 1 year and all of a sudden this is a 20-year trade. Okay. This is not about a 1 year. This is insurance over the next lifetime of myself and my children. Don't evaluate an insurance policy on a quarter-to-quarter basis. Accumulate your insurance so that in the event that the central bank loses control, you have insurance. I do not want the US to lose control of the system. It's going to happen, but I hope over time we will have a parallel system called Bitcoin developed, which will absorb the volatility and loss of the traditional financial markets. It's the only solution.
What was the debt situation in the 1970s when we had hyperinflation and then Volcker came in? And I mean, you don't see a scenario where someone comes in and basically hikes rates to double digits the way Volcker did, right?
They can't. Again, I'm trying to tell you, it's impossible. Volcker had the ability to do that because the outstanding debt of the United States wasn't at a point where it would bankrupt itself by raising rates that high.
Got it.
So Volcker, so you called it. I think you said it was a 39-year bond bull market.
Yep.
Guess what? I've been trading for 35 of those 39 years. I'm only have seen one thing. Excuse me, interest rates going from 14% down to under 1%.
Yeah, it's crazy.
I could have closed my eyes, put all my money in long-term treasury bonds 40 years ago, and then fast forwarded the clock and come and cashed out now and say, hey, look, I make 25% annualized just because I went into bonds. Well, what should have equities have done over that period? They should have done better. Yes, because they're more risky. Again, they rank lower in the capital structure.
So do we run the risk of just a massive unwind, like a catastrophic unwind of corporate debt when the market is convinced that the bond bottom is in?
Or the bond, when you say bottom, you mean yields, obviously, or you mean the bond top, which is in prices. Yes, we do. And we saw the precursor of that this week. This last week, long bonds in the US lost 10% of their value. Okay, the coupon on that bond is 2%. The annual coupon on that bond is 2%. It lost 5 years of return in 1 week.
Yeah, I actually pulled up this tweet that I wanted to talk to you about because I'm pretty sure you saw it too. There was
Jim Bianco?
Yes.
Okay, so I've known Jim Bianco for 30 years. He actually came to Canada to talk on our trading floor.
Oh, wow. Okay. Yeah. Let's talk about this thread for a little bit because I found it to be really
beautiful.
interesting. Okay, yeah. In some respects, what happened in bond markets last week was epic, something we might be talking about for years, a thread to explain. So he said the 30-year data goes back to 1973. And last week was the worst calendar week total return in at least a 49-year history. The long bond lost 9.35%.
Yeah.
Wow. So what is
Wow,
this?
is right. Again, 5 years of return gone in 1 week. Because bonds are contracts, right, Natalie? You don't make something out of nothing. It is a mathematical contract. You know what you were going to make on a contractual basis. You get paid $2 a year over 30 years. Well, you lose $10 in price, and all of a sudden you have 5 years of return vaporized, right?
Yeah, but basically what he's saying is that the bond market realized that quantitative tapering is coming, but you're saying they can't do QT.
Okay, so you're totally right. But like everything, it doesn't stop on a dime, right? It's a evolution, not a revolution. And while they can't do it, they can pretend. Like Jay Powell is still leaking through Goldman Sachs that there's going to be 4 to 5 interest rate hikes by a certain period of time. I'm calling BS on that, okay? But the market can believe Foss or they can believe Jay Powell. Who do you think they're going to believe in the short term? I know I'm right in the long term.
Yeah.
But in the short run, they're going to believe Jay Powell. So here's the key. Markets are an ebb and flow of risk and return and evaluation. This will work itself out, but it's very unlikely, in my opinion. In fact, impossible, but I have to say unlikely because you're never 100% certain on that side, that the coupon on the bond will ever exceed the 7% inflation rate that we are currently experiencing, which means you're guaranteed to lose money after inflation.
Well, so they're going to let it go to 10%, or how are they going to manipulate these numbers?
They cannot, again, because then they have to pay interest coupons of 10% on a debt burden that is already too big. So then your debt burden is expanding at 10% annually just because of the coupon on the bond. Impossible. Absolutely mathematically impossible, unless you want the USA to default, which I don't.
So both directions are essentially a cliff, and they should just be printing money to buy Bitcoin.
Okay, you're not. I wish that I could get into Pierre Poilievre's head to tell him to convince the Bank of Canada to do that. I want Canada to be the next El Salvador.
Yeah.
People forget, when you live in the United States, you guys live in a bit of a bubble. Like Argentina, the country of Argentina, which is a G20 country, has defaulted 4 times in my career. 4 times. Who in their right mind lends money to Argentina again? Well, stupid pension funds that say this time it's going to be different. Okay, the USA will be the last country in the world to default, but the USA will default as well.
And how long do you think that would take? Like, let's play this out a little bit.
It takes a long time. I hope it takes a long time because I have 3 kids and I need to help get a parallel system in place so that when that happens, or when the world realizes that a bond contract is not worth the paper it's written on,
right, they
have another alternative called Bitcoin.
Well, I mean, the reason I ask is because I just marvel sometimes at our ability to kick the can down the road because of this sort, the fact that we're the global reserve currency and the petrodollar and all of it.
But everyone's doing the same, Natalie. Everyone's doing the same. So while the USA is the global reserve currency, printing money happens in every single fiat-based country.
Yep. Well, and I mean, going back to what you mentioned about the aid and the loans going to, third world countries or developing nations, and yet the wealth disparity continues to grow and grow. Like, we're clearly doing something wrong. The system doesn't work. It doesn't function properly. It hasn't for decades, but yet we continue to go down this path. And thank God that we have something like Bitcoin to potentially steer us in the right direction. But right.
I'm not sure if you're married, but I have 3 children and I absolutely care about their future. I'm a boomer. I say this on Twitter often. I am a selfish boomer. I have pulled forward all the gains that should be accruing to my children because I'm so soft that I can't deal with the problems in the here and now, and I have to pull forward their gains. Every single boomer out there is a disgrace. Okay, a selfish, greedy disgrace. And I'm trying to fix that.
I wrote about that a little bit in an article about why I believe Bitcoin can and needs to save millennials, because we are
Yes,
just the most indebted nation due to the
it was a
policies
great
that
article. A
were
great
voted
article.
in before.
Yeah.
Thank you. But, let's play this out over the next couple of years, because there's still so many people who don't understand Bitcoin, don't appreciate Bitcoin, are skeptical of Bitcoin. Obviously, it's right now, currently, it's not the inflation hedge in the short term of the start of 2022.
We gotta look at log scale.
I know.
Okay. Natalie, we say it's not the inflation. It will take time for money managers to understand the beauty of Bitcoin, much like it took me. Like, again, I was skeptical.
Yep.
I have not stopped researching Bitcoin since 5 years ago when I first discovered it. And every single day I find stuff that makes me more convinced that it is the solution. With due mention to people like yourself and younger guys like Marty Bent and people who are out there telling the truth. And then there's some old guys like Lawrence Lepard and an old gold bug who has admitted, unlike Peter Schiff, who's conflicted. Lawrence Lepard was a gold bug and admits that Bitcoin is the better solution than gold. So this is only 13 years old. This thing takes time to permeate the membranes of the thick human skull, right? And the bondholders that have held bonds during a 40-year bull market in bonds. It's going to take time for people to open their statements and go, what happened to this safe thing I thought was a bond? It's currently marked down 20%. I mean, last week it lost 10%. Is it crazy to think you could lose another 10% on something that's supposed to be safe? So what is Bitcoin? In my opinion, Bitcoin is insurance. It's actually, you're purchasing insurance on the fallibility of an entity. In 2008, people were purchasing the insurance on things like Lehman Brothers and Bear Stearns. Who are they now going to purchase insurance on? Countries. And that is my opinion, that Bitcoin is the perfect insurance policy. And by the way, there's no counterparty risk. You don't have to go to an insurance company to claim your insurance policy, because the chances are that insurance company will be out of business, much like all other financial institutions. You have this beautiful insurance policy that has no time decay, right? Because there's no contract on Bitcoin. It's the world's most secure computer network. It's digital energy. Oh, and by the way, oil and natural gas will be priced in Bitcoin someday. And when that happens, the USA loses reserve currency status. But more importantly, US Treasury bonds lose reserve asset status, and Bitcoin becomes the global reserve asset of the world.
Okay, so let's unpack a little bit of that and the direction we're headed in, because like you mentioned, there is just such a lack of awareness about Bitcoin, education about Bitcoin, especially at the regulatory level, and there's not clarity, right, when it comes to pension funds. We don't have a spot ETF, and those avenues are starting to develop and grow, but they're not clear yet, and it's such a volatile asset. So just out of curiosity, let's say over the next just year or two, you're saying that the Fed won't be able to taper. Is there any amount of rate hike that the market will be able to stomach? Or on the flip side, is there a point where basically, the more the Fed attempts to intervene, the more the market is just convinced that it's going to stoke inflation, and the selling just starts and doesn't stop, and we just completely start to unwind?
Well, most people measure markets on equity indices, not on debt indices, right? And as long as the equity market continues to go higher, people are sort of convinced that the Fed is doing the right thing. So the Fed can extend and pretend, right? They can pretend this Ponzi will continue as long as it supports equity valuations that go higher. The famous Greenspan put, where, if markets drop by more than 20%, the Fed would come in and rescue markets, I think is more like a 5 to 10% put now. And by the way, bonds yield 0. So all pension funds out there that have exposure to bonds and equities, the only part of their portfolio that's performing is the equity market. The Fed can't let the equity market collapse. So they'll do everything they have to there. what I think you were leaning to is, though, how does this happen? How do people move out of bonds and into Bitcoin? And it all becomes part of an education process, much like what you're trying to do. I'm actually involved with a group, and I believe you've met one of my partners, a guy by the name of Jason Sansoni. I
Yeah.
think he mentioned he met you down in Miami. We're working hard. We have a group, 2 guys from Canada, 1 guy from Germany, 2 guys from Australia, and then Jason from Madison, Wisconsin. He's a trauma surgeon.
Yeah.
We're putting together an education program. It's not your typical college degree, which is all fiat shenanigan, Keynesian brainwashing. We're actually putting together the truth about how financial markets work and risk and everything. And that's an education platform we hope to offer to the world for free. Okay.
That's awesome.
So that people have this alternative to go out and learn if they're intellectually curious. So my opinion is this. Okay. Today, Bitcoin is worth over $2 million US per Bitcoin. 2 million US. That's what I think it should be worth today. Now, Foss doesn't set markets, but the point is it's trading at 40,000. It's trading at that's 1/50th of the amount that it should be trading at. Is Foss a buyer at 40,000 if he thinks it should be trading at 2 million? Yes, I am. I also started buying when it was under $1,000. And I actually believe Bitcoin to be more important today than when I started buying it in 2016. And why is that? Well, for a lot of the reasons we just pointed out, including the government response to COVID, for example, and the financial responses of printing money and universal benefits and, you know, all these programs that put money in people's accounts. That's not a bad thing, except we can't pay for it. So people need to understand, you can get this money, it's just going to cost you in the long run. And you need to move that money into an insurance policy, which I believe should be Bitcoin. So I look at everything. I can run through the mathematics with you as to why I think it's worth $2 million a Bitcoin. But the point is, don't take my word for it. Do your own research. Understand that if you own 0 Bitcoin, you are taking far more risk than if you own X% of your portfolio in Bitcoin. And that's up to you to decide. The only thing I'll tell you is the wrong answer is 0. Is the right answer 5% or 10% or more? Some Bitcoin maxis claim to be 100% in. I'm not 100% in Bitcoin.
Why?
Why? Well, I actually own a house. So I have a house for my kids to live in. So that's part of my net worth. And they like living in a house. But more importantly, I've never managed risk. Even though I'm convinced it's worth $2 million a coin, I'm not 100% certain. There are things that could go wrong.
Like what?
So
what threats are there to Bitcoin, in your opinion?
Well, I can throw out some of them. Some of them are short-term, some of them are long-term. Quantum computing is something that people claim. And I happen to believe that, yeah, if you can crack the Bitcoin blockchain using quantum computing, we have way bigger problems in the world of SHA-256, Visa security, and all that stuff. But here the reality. For 5,000 years, gold was the store of value, and then it sort of peaked, and there was a new technology that came along. I don't have to put, and this is the key, and I hope you appreciate this, I don't have to put all my money into Bitcoin in order for me to be fabulously better off if Bitcoin goes to my price target. It's the best asymmetric return or trade opportunity I've ever seen in my life, which makes it beautiful that if you put 5 or 10% of your portfolio in, you're going to be just fine, because there's not enough Bitcoin for the world to put 5 or 10% of their portfolio in, right? So if I get to that level, I know I'm just going to be fine. I don't have to be the richest emperor in a society that is broken down, because not everybody has Bitcoin. Not everybody can be 100% in Bitcoin. That's just the fact of the reality.
Right.
Okay. So am I 100% in? No, I don't manage risk that way. I never have, and I survived 35 years. Once you've survived 35 years managing risk, you can come back at me and tell me I didn't do it right. But for now, I'm going to stick with the way I manage risk.
What do you think of the people who do have 100% or let's say 90%, maybe some millennials who really believe in this
They
and
got a
they've
long
got
life
it.
to live. They can afford to be wrong, Natalie. I'm 58 years old. I got 3 kids and a lot of financial obligations, as well as a life to live. Like, I don't mind spending money to have fun. I know that's, absolute balderdash for a lot of Bitcoin maxis, but at the end of the day, I've worked hard to be able to have some fun with the money I've put aside, right? And, I sort of have a car because I like a car. Doesn't mean I don't tell people to not sell their car to own Bitcoin. But at the end of the day, guys who are 100% in probably don't have the net worth of other people who manage risk differently, right? It's just, it's easy to be 100% in when your net worth might be $25,000. But how about if it's many, many, many multiples of that? And I'm not saying I'm the guy, but there's a lot of guys who are many multiples of $25,000. They don't put all their money in one basket.
Right. Okay. So just to start to wrap up, where do you see the bond market going from here? And if you think the fair market value for Bitcoin is 2 million a coin, like how do we get to that? What's the pathway to that?
Here's the simple answer. And boy, you set this up like a perfect, this was a softball. You lobbed it right down the center of the plate for me, and I better knock it out of the park right here. Okay. So here we go. Total global financial assets in the world, including bonds, real estate, equities, commodities, currencies, fine art, any store of value, total global financial assets, $900 trillion. That's the total addressable market of financial assets. I think that Bitcoin ultimately gets 5% of that market. 5% of 900 trillion is $45 trillion. What's 45 trillion divided by 21 million?
Couple million a coin.
Over $2 million of Bitcoin in today's dollars. Now, some people will say, Foss, why are you so bearish? Why does it only get 5% of the market? And I'll say, well, it's got to go to 5% before it gets to 50%. So let's start with 5%. Is that fair? Where does that money come from, Natalie? Out of the bond market to start with. Anybody who owns bonds right now is a fool with a capital F. I cannot say it any other way. It is a fiat contract which is programmed to debase. High yield bonds are the world's worst investment right now that I've ever seen, and I've traded high yield bonds for over 30 years. High yield bonds have default losses. Well, the high yield index yields 4 and change percent, and inflation is 7%. So first of all, you're losing money on a real basis after inflation, investing in high yield bonds that have default losses that could easily average 2 and 3 and 4% a year going forward. Okay. It's the silliest investment I've ever seen. And I can say that with all due respect. When I started trading high yield bonds, they yielded 20%, 20.
Right.
Okay. It's mathematics. Yes. We've had a declining bull rate environment, which leads to what they call the bull market in bonds. There's $400 trillion of global debt, Natalie. We only need to get 10% of that market into Bitcoin. And that's your your $2 million price tag right there. It's coming in a big way, but don't measure it by weeks or quarters. It's time in the market, not timing the market.
Right.
Let's talk in 20 years. You're going to still be a young lady. I'm going to be a real old guy, but I still hope to be alive. Let's talk in 20 years.
It's funny you say that. I posted something with my girlfriends of that. I've been trying to orange pill all my friends. I posted some dinner and someone just like photoshopped our picture into basically all of us looking like we're 70 and 80 years old, because that's what's happened to the price in the last 2 months. But it's funny because the volatility, if you would have told someone when Bitcoin was 69,000, like, hey, in a couple of weeks you could buy it. You could buy more at 40,000. You'd be like, yes, like I'm going to wait for that.
And I call it a rounding error, right? So people might say I've lost my mind and it's worth $2 million in today's dollars. The market's telling me I have 2.5% or 2.5% likelihood of being right. I don't want to run through the math with you of why the market's telling me 2.5%. I'm not 100% certain, but I'm way higher than 2.5% likelihood of being right. Okay. All I'm saying is it's all a rounding error. I don't put laser eyes on because $100,000 is a rounding error. Okay. It's 2 million. I'll put laser eyes on when it hits 2 million bucks. I still hope to be alive. And if I'm not, my kids will. And that's when it'll happen. And hopefully they'll say, thanks, Dad. At least you did your homework.
I love it. I love it. Okay. Well, where I want to end it is just,
Sure.
I mean, thinking about your kids, let's say, you know, we move in, hopefully this happens. We move into a world that is the Bitcoin standard.
Yes.
And we now have hard money at the foundation of our global economy. It's becoming more and more globalized every single day.
Yes.
But we have deflationary forces at work too, like technology. And I mean, what does the Bitcoin standard look like? What does that future look like for the average person? What does day-to-day life look like?
Hopeful. It's what Jeff Booth would describe. It is a habitat and an environment where time is precious, where you are able to get off the rat, the gerbil wheel and actually appreciate time and energy, because that's what Bitcoin is, right? Bitcoin is a valuation of your time and energy that you can store for consumption in the future. You don't have to be continuously working to earn this thing called fiat and spending it because it's going to go down in value. You can invest your time and energy into a standard that allows you to determine what you want your lifestyle. If you work hard, yes, you'll make more Bitcoin, but you also have the pleasure of knowing it's in your control, not in the control of central banks to steal it from you. So I frequently tell this story. When I was in my 20s, I worked as a roofer. Okay. And that's a hard job. Okay. Installing asphalt shingles is really tough. I got paid $5 an hour. I worked 8 hours a day in the blazing hot sun. That $40, if I had kept it in the bank and held it for the 38 years since I was 20, that $40 a day probably buys me a hamburger and a beer today. That 8 hours of work is now worth a hamburger and a beer. That's not really good use of my time and energy, is it? So Jeff Booth is eloquent. Yourself, you tell her, you're beautiful when you have those little sound bites, and you do it with CNBC. I'm not sure if you've been on with CNBC, but I know you've done some really, really solid sound bites. It's an environment where people understand the education we're trying to provide. And all I would say to people is don't categorically dismiss this opportunity to change your lives. Many of the fiat jockeys out there will do it because they're conflicted. So Warren Buffett and Charlie Munger are conflicted fiat jockeys. Don't listen to them anymore. They might have been right in the past, but they are no longer right. The fiat system is broken. And Peter Schiff understands the fiat system is broken. He just won't admit there's a better horse in the race than his gold. So all of this is education. What does the world look like? Look, I want it to be a good place for my 3 kids. I'm privileged, okay, Natalie? I'm privileged, but I've worked hard to be privileged. I am excited about the people of El Salvador who have the opportunity to turn their lives into becoming privileged within the context of where they exist right now, at the lower end of the spectrum, because they have been beaten up by the fiat system.
Mm-hmm. But, Greg, I mean, you even mentioned not everyone can have Bitcoin, right? Like, are there people that won't make it onto this arc because there aren't enough? I mean, what
could be, right?
Is there going to be a rush for everyone to get on?
Here's the beautiful thing. And I think you made mention of this. What if a country makes the decision on behalf of their citizens to do that? That is solid leadership, because not everybody is smart enough to do the work, or maybe they're intellectually lazy, or they are conflicted. But we still need to care for those. And that's where the socialist in me comes. Again, I'm a capitalist with a heart. So don't splice this, the video guys out there splice and say Foss is a socialist. No, I'm a capitalist with a heart. Hey, good management like Bukele, He's doing it on behalf of 6 million El Salvador citizens who I believe are going to be, I often say to my wife, who's French speaking Canadian, we should learn Spanish. We better learn Spanish in Canada because we're all going to be reporting to El Salvador in the next 20 years if we don't get our act in gear.
Awesome. Any final thoughts or anything else you wanted to mention that we didn't discuss?
I just wanted to thank you and say whatever you're doing is really, really encouraging. I take tremendous strength from the community. I believe the Bitcoin community to be one of the smartest groups of people I've ever met.
Same.
It's incredible that the diverse, we have surgeons. I mentioned Jason Sansoni, this guy, Daz Bea, my buddy from Australia, who works on the electrical grid in Australia, but spends all his time writing educational content. Guys like Jeff Booth, man, that guy's from outer space. Michael Saylor, look, he's an alien. We know Saylor's an alien. He's a walking computer mainframe. He gets it. The people that don't get it, look, it'll take some time. I have hope, but it takes education. So keep preaching what you're doing. It's so nice to see. Look, let's be honest. You have a very nice personality that people can embrace. I'm old. I'm like, I scream a lot. People say, God darn, turn this idiot off. Well, it's a combination of both messages that we're trying to give, right? I scream because I care. Like, I honestly do care. And that's what it comes all down to. We all care. So we're just trying our different ways of helping our kids. Is that fair? We're trying to help our kids and in your case, future generations.